Let's also welcome Hemang Jani, who is joining us right now. Good morning, Hemang. First up, help us with your take on these Q-commerce plays, because they have also seen a bit of a correction in this market volatility. Two brokerage notes coming in, Swiggy as well as Zomato, where JP Morgan is highlighting the opportunities in the dark stores. They're also finding this kind of correction an attractive point to enter again. Swiggy is obviously looking out for a sports management team as well, and other than that, it's Zomato which has gone ahead and raised the target price. Other than that, I beg your pardon, it's CLSA that has gone ahead and raised the target price on Zomato. So, Hemang, amongst these two plays, which one looks more attractive to you, or rather, will you be bullish on both of these plays?
Good morning, and thanks for having me. So clearly, this has been, the favorite theme for the, investors over the past almost about now 2 years. And the companies have been raising funds. Companies have been, growing, particularly on the quick commerce side. You're saying that there is a decent amount of growth that they have delivered, and more so, the visibility continues to be good with more and more product offerings being made available. The only point here is that while the stocks have done pretty well, there is a case of over ownership, as you know, this platform companies is something that most of the investors have got into. And when you see the numbers, if there is no real big surprise, sometimes they tend to correct, and which is what we have seen in the recent past. So yes, the 15-20% kind of a cut does make this stocks very attractive. I would be more comfortable buying into Swiggy because of the valuation comfort and the fact that the kind of work that they're doing on the product offering is slightly better vis-a-vis Zomato. So definitely from a medium term perspective, I would be comfortable buying into a Swiggy at this point.
But Hemang, hi, morning firstly. Like Swiggy, Snehi was just highlighting on Swiggy. They're looking at this diversification, they're getting into sports management now. Are you comfortable with that?
So, Aisha, I think when you are a platform company, there is always an intense pressure on you to do something innovative and get into something that can create some excitement around your business model. And it gives you that flexibility once you have created that platform and once you have that customer base. So I don't see that necessarily as a negative, but we need more clarity from the management about exactly what they are aspiring to do, what's going to be the business model around it, what kind of investment they are making. But I think on an overall basis, Swiggy is extremely well placed at this point of time.
Hemang, what about the railway stocks? This morning we woke up to the headlines talking about how there could be an increase to the tune of 20% in railway budget as far as union budget to FY26 is concerned, and the fact that modernization of railways is a big focus area for the government.
So, Anisha, I think the best part of the re-rating and the growth surely is behind us. We have to really keep that in mind. But you will see some incremental news flow in terms of this upgradation, the technology investment by the government. Also, typically around the budget time, there is a tendency to look out for some of these names. So within the companies which are there, I do like BML. I do think that given the diversified nature of the business, including railways and many other interesting areas, this stock definitely should grow at a good rate. And the market cap is much smaller vis-a-vis the overall opportunity. But I'm not very keen to get into many other names just because you have some news flow around it. Because typically, there is a de-rating which is going on for some of these PSU names. So should use any pop as a exit opportunity over there.
Hemang, which stock did you just talk about?
I talked about BEML.
BEML. Okay, that's the stock that Hemang flagged off. But yeah, I think the picture is pretty clear out there. He's saying that, valuations have been stretched quite a fair bit. So if you do get any sort of pop in anticipation of a higher allocation in the budget this time around for railways, use that opportunity to exit in case you're not a very long-term investor. But a lot of key earnings, like we've been flagging off. For Infosys, of course, the growth may moderate according to the ET Now estimates, and the constant currency headwinds are also kind of visible. Axis Bank, deposits, loan book growth, they're all going to remain soft. And for Reliance, we're anticipating that it's actually Jio which is going to drive growth for them, while OTC and Petchem will continue to be a drag. Hemang, what's the anticipation from Reliance? Because, many brokerage notes are now talking about as to how there's valuation comfort in Reliance. We've seen as to how lagging the stock has been, hasn't quite participated much. What do you think the earnings could actually spell for the stock?
This quarter, Aisha, there is going to be a larger focus on the EBITDA margin expansion, given the way, from Q2 to Q3, refining margins have really panned out where there's an increase. Also, you're seeing the ARPU, growth because of the price hike that they have taken. And retail, we had the festive season, so you will see some impact. So I do think that on an overall basis, while top line may not look that great, the margin expansion would be something that we will be watching out for. And having underperformed big time in the last, let's say, 12 months, I do think that the risk reward is attractive at this point. The bigger upside will come when there is a announcement around the Geo or demonetization or the IPO or the unlocking of value, whatever you may call it. But I think the market will get excited only when you have any specific news flow around that. But from a valuation standpoint, Reliance does look attractive.
Reliance does look attractive at this point of time. But Hemang, today, of course, there is that VRR which is likely to happen, and that liquidity boost that the banking names are likely to get. Given the fact that this is one of the most underperforming sector, it's ripe for a bit of a up move. But what's the best way to play it? Should one just buy, let's say, a Bank Nifty ETF or a basket? Should one look at a large private banking name, stick with HDFC or PSUs? What's the best way to, ride the bank revival?
If you're a smaller investor, I do think that bank ETF is the best way to participate, because you will get a fairly good diversified banks to look at. But if you are looking at some stocks, I do think that some of the large private banks should deliver good results also, and I think the valuation comfort and overall stability perspective also, they are well placed. So ICICI Bank and State Bank are the top picks that we have at this point of time. And I would definitely stay away from the smaller PSU banks, because that entire re-rating story and the upside that we have seen, I think, is behind us. I don't think we should be again looking into those names just because they have corrected 15-20%. In fact, the PSU bank index in the last, I think, few months has corrected 25%, which is huge. So I definitely think that one should stay away from the smaller PSU banks.
Stay away from the smaller PSU banks and some of these large cap names that you can definitely look at this point in time. So all eyes on the banking names. But Hemang, where is it that you are currently in the entire energy transition theme, and where is it that you're finding comfort to buy in afresh or add more to the existing positions?
Aisha, this entire renewable energy and solar theme actually has played out very well in the last, let's say, 12 to 18 months. And my feel is that we should allow these companies to stabilize, and we should have a detailed look at their numbers, be it Wari or, for that matter, some of the Adani Group companies. I don't feel that, one should really buy these companies only because they have corrected 15-20%. Names like SW Solar, we've seen a steep correction. But when I look at the market cap, when I look at the valuations, and more so the global setup that we have, where things are actually not looking that great, I definitely think that one should watch out for more clarity of the growth and slightly better valuation before entering into these names.
Okay, Hemang, great to have you on the show. Thanks as always for your time.
If you like this video, then like, share and subscribe to ET Now.